Hi, good morning. Just waiting for the clock to tick over. Somebody give me a thumbs up or an okay, just as a quick sound check that you all can hear me. Somebody just type a yes in the chat box. Let me know that I'm audible, that you guys can actually hear me. Okay, super. All right. Good morning, everybody. My name is Kushal, and welcome to this episode, this live webinar of MarketMaster. And I'll tell you what MarketMaster is, and you've probably already got a brief of what this program is going to be today. We are going to talk about how to solve for any of your investment goals using a 6-step template. All right. And you will be able to have the confidence and clarity to form your investment plan, hopefully, at the end of this session. All right. So, for those of you who don't know me, and if you haven't read my profile, hi, good morning. My name is Kushal, and I've spent a large part of my life in financial services and education. All right. And I work with a number of HNI clients. I help them assist and manage their mutual fund investments, but very, very passionate about investor awareness, very passionate about speaking to investors, both retail as well as HNI. And what we've come up now is a webinar format where very simple, very non technical, insightful webinars that you can act upon. All right. And we created a property within ET Money called MarketMaster. It is 3 very powerful webinars for the do it yourself investor. And these 3 powerful webinars are curated for a very specific audience. Okay. So, अगर आप ऐसे जन हो जिसने एसआईपी कभी किया नहीं हो, if you've never ever started your investment, then taking your first step to building wealth is the program that you want to go and attend. After that, I guarantee you, you will have all the motivation and the hunger to go and start your SIPs. Okay, so if you have been procrastinating, that's what you need to do. Today, we're going to talk about the 6 steps to solve for your goals. So, more relevant for existing investors. And if you want to know about the disciplined investor, if you want to understand a little bit about practical aspects, where investors trip up, how do you get a bulletproof portfolio, and even the road to genius, then hit like, subscribe, notify in the ET Money YouTube channel, and you will get notified when we do the next webinar live, which is the disciplined investor. But today we're going to try and solve for our investment goals. So, how this presentation is going to work is literally we're talking about 6 simple steps. And the first step means how do you actually define a goal? Once we define our goal, we will sit down and understand what are the categories of funds that are appropriate for that goal. I'll tell you what that means. The third is we have to decide if we want equity funds, for example. There's large cap, there's mid cap, there's small cap. Do we want active funds? Do we want passive funds as part of our portfolio? That's something that we're going to go and look at as well. And once we've made that decision, फिर scheme कैसे select करना है? I think, and that is something which a lot of you struggle with. A lot of you always want to understand whether there is a better way that you can pick a winning scheme that is going to give you higher returns. So we're going to touch on that as well. Finally, how much are you going to invest? Or how much do you need to invest, whether SIP or lump sum, to be able to achieve your goal on time? And finally, there's so much to do in terms of reviewing and monitoring your portfolio, but kam se kam kya karna chahiye? And give me a thumbs up if you are understanding this is going to be the flow of the presentation, and I'll take you literally through each step. And at the end of each step, I'll ask you for a thumbs up. So you must give me a thumbs up so that I know all of you are on the same page. We'll try and do a question answer session at the end. Okay. But my suggestion and my request to you is don't start spamming the chat box with basic questions. Kushal, सबसे अच्छा म्यूचुअल फंड स्कीम क्या है मुझे बताओ. I am investing in this scheme. Is this a good portfolio? Please, this presentation is not for that. You just sit back, relax, and enjoy. Allow me to do the thinking. Let me guide your thinking, and you will be able to visualize, I promise you, in a very, very simple manner as to how to go about and solve for your investment plan. Okay, so without further ado, let's get started. The starting point is setting up a goal. And a lot of people ask me, especially people who've just started their investment, कि ये goals बनाना, plan बनाना ना जरूरी होता है क्या? And I actually say, if you're just starting out a goal, it's not necessary that you have all your goals listed, because it's very tough. Why is it tough to visualize a goal? Because The definition of a goal means you should be able to write down the following things on a piece of paper. We'll start with what your current age is. So over here, let's just say our current age over here is 40. Okay, that's my current age. You have to define किसके लिए आप invest कर रहे हो. It can either be retirement, it can be for your kids' education, it can be to buy a house, it can be anything which you need a nice lump sum amount for. If you really get confused about anything, let's just say we want to invest for the purpose of wealth creation. Over here, what I've said is let's invest for the purpose of my daughter's education. My daughter's 5-year-old today. When do I need the money? I need the money by the time she's 25 years old. तो 20 साल बाद मुझे ये पैसों की जरूरत होगी. और कितने पैसे की जरूरत होगी? How much money will I need? Well, in today's day and age, let us say that that daughter's education आज के ज़माने में costs me 30 lakh rupees. So if you are able to write down all these things, and it's not easy to write it down. Okay, it's not easy to write it down. I often tell people that if you are just starting your investment, ये goals और plan बनाना इतना जरूरी नहीं है. The only thing that is actually necessary is to go and get started. Say that हम लोग wealth creation के बारे में करते हैं, we'll invest for the purpose of wealth creation. बाद में देखा जाएगा ना, whether you want to allocate it for retirement or for buying a house, that all you can see a little later. Okay, so if you are a little novice, you can invest for the purpose of wealth creation. If you are a little bit more experienced, then it's good to have goals in front of you, because at least you know that you have a certain plan. But this is what we are looking to solve for today. So give me a thumbs up if all of you are on board that I'm a 40-year-old person. I want to invest for the purpose of my daughter's education. Today, that daughter's education is costing me 30 lakh rupees, and I need this money after 20 years. If that is the case, how should I go about my entire investment process? Let's go and have a look. And that's the first step already defined, right? How do you define and set up your goals? We've already defined what our goal should be. Now, when you need the money, which in this case is 20 years, becomes very, very important. You must know when you're going to need the money, because when you're going to need the money is going to determine आप risk कितना ले सकते हो. What I've given you over here is a very simple bucketing strategy, and this bucketing strategy, 0 to 3 years, for example, means that you need to use the money, you need to spend the money within a period of around 3 years. तो 3 साल के अंदर you need access to that money. If you need access to the money has to be there. It means आप ज़्यादा risk नहीं ले सकते हो. The investment objective over here is very clearly to protect capital. So you don't want too much of equity exposure, because equity is very volatile as an asset class. So you largely want to invest in debt, and many debt products, including mutual funds, including FD, are a good fit if you need to use the money within the next 3 years. But when it comes to 3 to 5 years or 5 to 7 years, थोड़ा complicated हो जाता है, because if you've been doing an SIP, for example, for 5 years, मतलब 5 साल is a lot, no? आपने काफी काम किया हुआ है. And if you have done something religiously with discipline for a period of 5 years, then there is an expectation of reward, right? You want to be rewarded because you say, मैंने 5 साल काम किया है, where are the returns? But at the same time, it's a tricky bucket. And I say it's a tricky bucket. Why? Because you don't want it at the cost of high risk. We've seen, as far as equity is concerned, even 3 years and 5 years is not the largest time frame ever. So over here, you definitely want debt plus returns, and hybrid funds offered by mutual funds is a perfect category if you need to use your money within this amount of time. We'll look a little deeper into each of these buckets in just a couple of slides. All right. Then there is 7 and 10 years and above. This bucket over here is tailor-made for wealth creation. Equity as an asset class, you have to invest if you have time on your side, because equity is one asset class that the longer you remain invested, not only are you giving yourself the best chance of earning inflation plus returns, but the longer you remain invested, the less risky equity as an asset class comes. So you have to be really aggressive when you are going and investing in this bucket. Pure equity funds and maybe a little bit of hybrid funds is a good choice. And finally, there's an opportunistic bucket. ये opportunistic bucket में you are saying you want to take consciously ज़्यादा risk. You consciously want to take more risk than you think, or than most people are taking, because you want to try and generate a little alpha. What is an alpha? An alpha is market return से ऊपर. So if market return is defined as the Nifty 50 returns, you want a little bit more than Nifty 50 return. That, for example, is an alpha. And direct equity, gold, PMS, crypto, even small cap and thematic fund, these are all part of your opportunistic bucket. Okay, means you're taking risk capital. I always say if you need your money within 20 years, and that is what we are trying to solve for today, right? कि आपको 20 साल के अंदर पैसे चाहिए, then give me a thumbs up if all of us agree that 20 years means this 7 to 10 year and above bucket. This is where our core investment, this is where our core funds are going to be. राइट हम लोग मे बी थोड़ा opportunistic bucket भी ले सकते हैं, but like I said in the last line over there, this is the satellite portfolio. This is not going to be a core portfolio. Your core portfolio is going to be the kind of funds that are there in the 7 to 10 years and above bucket. Okay. So what are the categories of fund and what kind of returns हम expect कर सकते हैं as far as this is concerned? देखो, as an investor, no, especially अगर आप अपना खुद का पैसे manage कर रहे हो, if you are managing your own money, you need to always ensure that you have the right fit for the right bucket. इसका मतलब क्या है? If you need money within the first 3 years or within the next 3 years, as I've said, your objective does not have to be return. Your objective has to be protecting capital. And depending on when exactly you need the money, there are a number of products available out there. Liquid funds are like savings bank account. अगर आपको 3 साल, तीन महीना, 6 महीना के लिए you want to park your money, go and invest in liquid funds. I don't know if any of you all are running your own business, but if you have a current account, you know that bank current account में कुछ interest दे ही नहीं देता है, but liquid fund में at least earning that 4%, 5%, somewhere over there, 3, 4, 5%. So that becomes an option, right? If you are looking at a period of 1 to 3 years or just over, there are many funds. 1 year, 2 years, may a short duration fund is good, but if you're going 3 years and 4 years, you have a number of corporate bond funds or banking and PSU funds that actually solve the purpose, which is trying to give you debt plus returns. Okay. The beauty about debt mutual funds is that they do offer you a slightly better rate than bank fixed deposit. And agar aap 3 saal ke liye hold kar dete ho, then it becomes long term. You get the benefit of some beneficial taxation that can increase your takeaway returns. Also, agar aapko 3 saal mein, as I said, you don't want too much of equity in your portfolio, lekin agar dal mein kuch tadka chahiye, right? Then a conservative hybrid fund, for example, would be a very good mix. Conservative hybrid fund typically takes around 20-25% equity exposure. तो आप उससे ज्यादा नहीं लेना चाहते हो, because again, in this bucket, the main objective जो आपके पास है, you want to protect capital. Give me a thumbs up as I keep going along so that I know that all of you all are absolutely understanding what it is that I'm saying. If you're going to require money after around 5 years or 7 years, then डेट से काम नहीं चलेगा. देन यू डेफिनेटली वांट अ लिटिल बिट ऑफ इक्विटी इन योर पोर्टफोलियो. एंड जैसे आपने ऊपर देखा, देयर इज कंजर्वेटिव हाइब्रिड फंड. कंजर्वेटिव हाइब्रिड फंड मतलब लेट अस से 75% debt and 25% equity. Then there is something called balanced hybrid, which you can almost think of it as 50-50. And in the last line over here, you'll see something called aggressive hybrid funds. Aggressive hybrid funds typically have around 65 to 80% equity exposure, and balance, it gives you a little bit of a cushion of debt. So for each of these categories of mutual funds, right, whether it's conservative, balanced hybrid, aggressive hybrid, SEBI एक rule book देता है. And these fund managers and the fund management teams have to go and offer, have to go and deliver, or have to construct a portfolio within this rule book. Okay. So balanced advantage fund is a very interesting category that has caught the fancy of investors over the recent years. And balanced advantage fund mein kya hota hai? The fund manager, depending on what their call of the market is, they can move between conservative, balanced, and hybrid. So their equity exposure can be 30%, but their equity exposure can be up to 75-80% also. 100% nahi rahega because it is still a hybrid fund. But you know, tell me, कभी कभी आप लोग भी सोचते होंगे नो दैट इज दिस अ गुड टाइम टू इन्वेस्ट मनी, इज इट नॉट अ गुड टाइम टू इन्वेस्ट मनी, एंड हम लोग वेट करते रहते हैं, right? And actually waiting is the worst thing that you can do, because then you've not got your objective of starting to invest. So if you have especially lump sum amounts, balanced advantage fund is a great place not to think too much. Just go and park your money over there. Depending on what the state of the market is, like I said, their equity exposure varies. All right. You also have multi-asset funds which offer you all asset classes in one fund. And if you need your money after 5 or 7 years, maybe even large cap funds can be invested in. But again, you're conscious of the fact that you don't want to take unbridled risk as far as this is concerned. Okay. Then you've got your 7 to 10 years and above bucket, and this bucket is tailor made for wealth creation. Little bit of aggressive hybrid funds, especially as your amounts grow bigger, but otherwise all the pure equity funds that are available, whether they're index or smart beta or actively managed funds, all the various categories of fund go and fit into this particular bucket. Okay. Finally, opportunistic. When I say opportunistic, for example, let's talk about a sector fund. Why have I said that is opportunistic? I say opportunistic because one sector, for example, can have years, few years where you get a lot of returns. And then for a number of years, aapko kuch mil nahi raha hai usse, right? If a sector is badly hurt, it might take a lot of time for the sector to recover. That's why people go and invest in mutual funds, which gives them like a Nifty 50 or a diversified mutual fund. because different sectors do well at different times, right? If one sector is doing badly, it is offset by another sector that's doing well. So if you are going to invest in a sector fund, you need to have the confidence and conviction that this sector is going to do very well, ताकि आप lump sum amount डाल सको. And opportunistic means what? It means mauka, right? So you're getting in at the right sort of time. Same thing with thematic funds, right? So again, it's opportunistic because you're saying this opportunity might not exist for long periods of time. So you literally have to run in and run out as far as that is concerned. So to just put an end to this bucketing strategy, just a few comments. If you need your money within 3 years, you have to be a little conservative in your outlook. I've kept return expectation as 2 to 6. You might earn a little bit more also, but calculation ke hisab se, depending on the kind of funds that you're investing over here, that's what you need to do. Remember, investing in debt funds is not going to create wealth. Okay, if you want to create wealth, and I'm all about wealth creation, then equity is the asset class which you need to go and do. But over here, when you need your money within 3 years, you're prioritizing safety over returns. Then debt mutual funds, especially if you are able to remain invested for 3 years, no, your take home can be significantly high. Okay, if you need your money in 5 years or 7 years, then definitely thoda equity exposure to chahiye aapko apne portfolio mein, right? I think for 3 years to 5 years, hybrid funds, whether it's an aggressive hybrid or a balanced advantage fund, is a very, very good fit. But if you need it for 5 years or 7 years instead of a BAF, you can even look at large cap funds if they are in that 5 to 7 year frame. All right. Glide path becomes very critical. And I will be ending this presentation by telling you what glide path management is so you can understand that at that time. 7 to 10 years and above, in this bucket, if you have the luxury of this time, there is no choice. You have to be aggressive with your equity investments. And what is a good equity return to consider in your financial planning perspective? I think general consensus is 4 to 6% above inflation, right? So agar inflation is around 6 to 7%, then maybe around 10 to 13% is a good number to plug in as far as equity is concerned. And again, over here, you have to get aggressive with your investments, pure equity funds, maybe a bit of hybrid funds you need to go and invest with. Investor personality, and we'll talk about that today, we'll talk about it in the coming week, is important. But largely, when people come and ask me, Kushal, how many schemes should I have as part of my portfolio? Because aajkal choice bahut zyada hai. Today the choice is very large. And I would say if you have one goal, which is wealth creation, you don't need more than 5 or 6 schemes as part of your portfolio. Okay, you don't need more than 5 or 6 schemes as part of your portfolio. Finally, there's the opportunistic bucket. You're taking that extra risk because you want to try and get those better returns. As I said, opportunistic bet you should be making as lump sum investments because this opportunity is not around for so long. अगर मौका आपको लग रहा है कि ये 2 साल में आपको मिलने वाला है तो ठूस लो पैसे उसमें, right? But again, you have to have a lot of confidence and conviction to be able to do it. Mid cap schemes, especially small cap schemes. Small cap schemes, as you're going to see, and you probably already understand, are quite volatile, right? And for very volatile asset classes or for very volatile schemes, an SIP method is recommended. Once you start investing for a little bit, I think after 3 years, 4 years, 5 years, एक बार आपकी investing की आदत लग गई, then you can definitely consider having international exposure as part of your portfolio. Some people like it at 5%, some people like it at 20%. There is no rule to it as yet. But again, very clearly remember, from an opportunistic bucket, you are saying there is going to be more volatility over here. So you are taking that little extra risk to try and generate a little bit more returns. But again, if we come to the goal that we are solving today, and what is the goal we are solving today? Give me a thumbs up if we are all on the same page till now. We've looked at 2 steps. We said the first goal that we are trying to solve for is my daughter's education. आज के ज़माने में उसका कॉस्ट है 30 लाख रुपया, and I am going to need this money after 20 years. If I need this money after 20 years, I've gone and looked and located which bucket this 20-year bucket fits into. And we've identified 2 buckets. One of them is the wealth creation bucket, which is that 7 to 10 years and above. And then there is an opportunistic bucket also. But by and large, you are saying you are looking at the concept of pure equity funds when you are going and investing in this category. So if you need your money after 20 years, we are going to have pure equity funds dominate most of our portfolio. All right. Okay. The next step after that. We've decided and we've understood now कि अपने को pure equity funds चाहिए अपने portfolio में. Now, when you look at pure equity, we have to understand, do we want large cap, mid cap, small cap? And before we get into active versus passive funds, etc., I just want to give you a small clue as to a brief look in as to how this market is structured. Okay. And when you talk about how this market is structured, there is something called large, mid, and small cap. Micro cap bhi hai, but we're not going to talk about micro cap too much at this point of time. If you look at large cap is defined by SEBI as the biggest 100 companies that are there in the market. And totally, these 100 companies are so big. Can you imagine? They're so big that 77% of the total market cap is in these top 100 companies. So when you look at the large cap as a sector, you will see that large cap, look at the names, right? Like Reliance and HDFC Bank and Asian Paints. These are all called blue chip. This is meaning blue chip. These are industry leaders. These industry leaders have been around. They've built up a track record for themselves. They've survived the bad times that every industry, that every country, that every economy goes through, and they've come out stronger and they've flourished in the good times. These are very, very recognizable names to everybody. And again, they are so large that these 100 companies are 77% of the total market cap. Okay. So that is your large cap space. 1 to 100 is large cap. 101 to 250, which is your next 150 companies, these are called mid caps. And mid caps, the range is much wider, right? Because you've got 100 and you've got all the way up to 250 companies over here have a lot of growth potential. Okay. These are giants of today. Can they become leaders of tomorrow? Again, all the names, if you see the names over here, these are all very well known names. I think all of us sitting in this presentation today will know each and every name that is over here, right? They're still not as big as some of the large cap companies, but these are very, very large companies. These are aggressive companies, but this is a lot more volatile than large cap. Okay, this is a lot more volatile than large cap. And then finally, you have the small cap space. And again, small cap, you'll see there are 250 companies, 251 to 500, matlab 250 company hai. And these 250 companies are only 6% of the market cap. So these companies are very high on risk and return. बहुत growth potential है over here, but one thing remember, investing in small cap, no, there is constant volatility. Constant volatility in the bad times can be really, really bad. Sometimes, I think I read a stat somewhere that in the last 5 years, 50% of the companies that were in small cap over the last 5 years either gave you a zero return, a negative return, or some of these companies don't even exist after a period of 5 years. So, you can almost think, अगर आपको cricketing का analogy lena hai, right? Think of your large cap as your national team, think of your mid cap as your maybe domestic team, and small cap, think of your under 19 team. Okay, can the under 19 player make it to the Ranji Trophy? Can they make it to the national team? National team is already well established, right? But then you've got your mid cap and your small cap. So literally, I think that's you have to think along those lines. All right. So when we talk about investing in equity, how much in large, mid, and small, this is your foundation stone, and everything else is a permutation combination after this. This is also called your Nifty 100, then there's a Nifty 150, there's a Nifty 250, and there's a Nifty 500. Nifty 500 is large, mid, and small. We're not going to grow and explore micro cap at this point in time. Okay, so our decision over here is in the large cap space, mid cap space, and small cap space. How much exposure should we take in this, because we want to invest in pure equity funds, and should we go for active funds or passive funds? Before I do that, active funds versus passive funds, just one slide, because I'm sure all of you will be familiar with this. What is the difference between an active fund and a passive fund? Okay, give me a thumbs up, by the way, if all of you all are on board and you all are able to visualize कि मैं जो भी बात कर रहा हूं आपको दिखाई दे रहा. Okay, when you talk about passive fund, a passive fund is almost like your Nifty 50. A passive fund is like your ready-made portfolio, जो बोलते हैं ना, it's literally a ready-made portfolio. So if you'll allow me just to share my screen at this point in time, you'll understand. This is the Nifty 50. Nifty 50 is a ready-made portfolio. They have 50 companies. Twice a year, maybe these lists go through a little bit of a change, and larger the company, larger the weightage, right? So this is a 50 stock portfolio. This is an index fund. And an index fund, you can also have a Nifty 100. Nifty 100 is the top 100 companies. Larger the companies, larger the weightage. So if you want to go and invest in a Nifty fund or a Nifty 100 index fund, then you can go to any mutual fund, and all these mutual funds will be able to offer this product to you. All right. The fund manager's job over there is, as you can say, it's fairly limited. They have to go and copy, right? They have to go and copy what the portfolio is. Nakal karna hai uski. Okay. But in an active fund, it's very different. In an active fund, the fund management team is deciding what stock should form part of their portfolio. So they've been given a rule कि इसके अंदर आपको खेलना है, but the fund manager has the decision making ability to say these are the stocks I want in my portfolio. This is not. And the purpose of an active fund is to be able to beat the passive fund. Passive fund is also an index fund. Passive fund is also called a benchmark. So what you'll see from a fund management style, active fund may fund manager is very, very limited uska kaam. But in an active fund, they have analysts, they have researchers. There's a lot of work that goes into studying companies, studying sectors, studying industries, going and speaking to the companies, going and meeting people, etc. तो इतना ज्यादा काम अगर होता है तो कॉस्ट भी तो ज्यादा बढ़ते हैं ना. That is why, if you actually are wondering why active funds have a higher expense ratio than passive funds, it's because it's costlier to run, right? But the allure of active funds is what? You're saying you don't mind paying a little bit more extra fees because you want the active fund manager, or you want the fund manager to be able to actively try and beat the passive fund return. Passive fund return में आप क्या बोल रहे हो? You're saying I am happy with the market returns. जो भी निफ्टी 50 मुझे देता है मैं वो स्वीकार कर देता हूँ. जो भी मिड कैप 150 दे देता है मैं वो स्वीकार कर देता हूँ. I want to keep my costs low and I want to ensure market returns. Okay. And there is no right or wrong. Some people prefer to go for active funds, some people prefer to go for passive funds, but we're going to take one look a little deeper and sort of try and understand a little bit more. Can we decide about this selection? So, over here, for example, again, I've broken down large cap, mid cap, small cap. Okay. And if you can see large cap, the category is there. See what a passive fund or an index fund or the benchmark is, what is circled in the orange yellow box. How do you identify what a passive fund is or what an index fund is? नाम में ही लिखा होता है. Nifty 50 fund, Nifty 100 index fund, right? So you are able to identify it just by looking at the name of the fund. So this is a low cost fund. Then you have an example of an active fund, which is the center column. And these active funds have to play within a certain rule book. In the large cap category, what is the rule book? That large cap universe is top 100 companies, or 80% of the AUM, which is a very large chunk of the AUM. They have to necessarily invest in these top 100 companies and then try and beat the benchmark. Okay. So just to recap, you've got the index fund, which is the benchmark, for example. You've got a Nifty 50 index fund. So how do you identify it? नाम में ही लिखा होता है. Okay, नाम में ही लिखा होता है. And then there is active funds like your blue chips fund, your top 100 fund, etc. And the purpose of an active fund is to beat the index fund, but they have to play and operate within the rule book. And over here, the rule book is what? That 80% of the AUM have to be invested in the top 100 companies. So actually, if you go and think about it, and we'll see why a little bit in the next slide, large cap scheme may now, a lot of portfolios are looking very similar, right? Because सबके पास वो same नाम है. If you look at mid cap, which is one level less, again, it's very easy to identify what an index fund is. And even an active fund, it's very easy because mostly naam mein hi likha hota hai. ICICI, so and so mid cap fund, right? Mid cap fund is 150 companies. So aapko zyada range hai. But only 65% of the AUM the fund manager has to invest over here. Even if you look at small cap, right? Small cap, the universe is 250 companies. 250 companies, may you are saying 65% of the AUM has to be invested in these companies. The point I'm trying to make is, in large cap, the schemes can look very similar to each other, but in mid cap and small cap, somebody's scheme can look very different from each other. ICICI small cap can be very different from DSP small cap, and they can be very different from the 250 index fund also, because the scope to play around is a lot more. You can go and invest in large and mid cap. So there are various categories. Flexi cap bhi hota hai, multi cap bhi hota hai. But base level pe there is large cap, mid cap, and small cap. And that's what we're going to stick to today. Everything is a combination of these three caps. So coming back, and this is what we want to look at. I said the purpose of an active fund is to beat the benchmark. You don't mind paying higher fees so that it beats the benchmark. We simply have to go and look at the data now and see whether the active funds have been able to beat the benchmark or nahi, right? And over here, this is some data that I've taken you. In the last 5 years, how many of the large cap funds actively managed have been able to go and beat the benchmark? And if you look at the central piece in the last 5 years, only 18% of the funds have actually been able to beat the benchmark. Benchmark over here, samjho Nifty 50 or Nifty 100 hai, right? Only 18% of the funds have been able to go and beat the benchmark. It's a very, very, very small portion. But if you go and look at the mid cap and the small cap space, you are seeing maybe it's more 50-50 over here. That because there is an opportunity for funds or schemes to look very different, from portfolios to look very different from each other, there is a chance that they will be able to outperform as well. At least outperformance ka scope hai, right? Over there, you saw it was 18%. Here, you're seeing the numbers of funds that are beating the benchmark are closer to 50%. Therefore, I would say that if we are looking to have a portfolio of large cap, mid cap, small cap, because we want these pure equity funds, we are saying large cap may let us go in this time for a passive fund, which can be a Nifty 50 or a Nifty 100 fund. But mid cap and small cap may let us go and have actively managed funds as part of my portfolio. Give me a thumbs up and an okay if all of us are pretty clear till now. We finished 3 out of the 6 steps. We started it by saying our goal is I want to save for my daughter's education, where I need 30 lakh rupees, or what costs 30 lakh rupees today after 20 years. When you need the money will determine which bucket. So 20 years will determine that the bucket that you have to invest in will be pure equity funds. Acha, pure equity funds ke andar there is basically large cap, mid cap, small cap, and a combination of everything else after that. But let us keep it as large cap, mid cap, small cap. We want to decide first whether we want active funds as passive funds as part of our portfolio, and we've gone and looked and seen that large cap may let's go with a passive fund. तो एक Nifty 50 index fund या Nifty 100 index fund लेते हैं. And mid cap and small cap, where there is scope for portfolios to look very different from each other, let us go with an actively managed mutual fund scheme. All of you are on board with what it is that I am saying till now? Just give me a quick thumbs up if that's the case. Okay, great. Now, the next question is, once we've decided कि ये index fund लेना है या एक actively managed fund लेना है, then how do we go and select a scheme? Now, when I come to how it goes and select a scheme, first let's go and see how to select a simple Nifty 50 index fund. Okay, and when you talk about how to select a simple Nifty 50 index fund, this is some data that came out just a little while ago. And as you can see over here, focus on the central one, which is the last 1 year. We've looked at Nifty 50 index fund, the best performing funds and the worst performing Nifty 50 index fund. And as you can see over here, ज़्यादा कुछ फर्क नहीं है. 19-20 का return, the best funds and the worst funds means they're all performing fairly similar. So quite honestly, if you ask me, right, how do you go and select the best Nifty 50 index fund? I would go and say, look at the mutual fund that you are comfortable with. If you're comfortable with an SBI, if you're comfortable with a UTI, if you're comfortable with Canara Robeco, if you're whichever mutual fund scheme, whichever mutual fund company you're comfortable with, go and pick their mutual fund, go and pick the Nifty 50 fund. Right? People will tell you things about tracking error and tracking differences. Yeah, we are not investing hundreds of crores of rupees that we need to really know all that. A Nifty 50 index fund is almost like this, right? Is that imagine you're in an examination hall and 30 of you are giving the exam and everyone is given the answer paper also. आपको क्या करना है? Answer paper से नकल करना है, copy करना है. मोटा मोटा you're going to get the same results, right? Okay, some of you might get handwriting के लिए, this के लिए little bit ऊपर नीचे, but मोटा मोटा the job is exactly the same. So I'll show you some data anyways to drive home my point. But if you are going and if you are selecting a Nifty 50 index fund, ज़्यादा दिमाग नहीं लगाना है. Pick anyone that you're comfortable with and go and get started. When it comes to scheme selection and how do you select an actively managed mutual fund, then there is a lot more data and science that goes into it. And we're going to have a look and play around with the ET Money report card, which is a pretty cool functionality that ET Money has come. And this is something that is available, both on the app as well as on the desktop. So what I'm going to do is I'm going to go and share my screen and we're going to just play around a little bit mota and see what this ET Money report card is all about and how does it actually go and help us to select a particular scheme. Okay. And I've shared my screen and we've come to the Parag Parekh Flexi Cap Fund. So first of all, यहाँ नाम से ही मालूम पड़ता है that this is a flexi cap fund. There is no index in it, so it is an actively managed fund. You are investing in the direct plan. As you all probably know, direct plans may you're getting a little bit higher return than a regular plan because you are cutting out the middleman, and you get this very nice fancy report card. Look, one of the things that most people do when they want to select a mutual fund scheme is that they are going and they want to see which is the best performing mutual fund, because we all want to invest in the best performing mutual fund, but it's not a very easy thing to have, because best performing over what time frame, right? There can be a fund which is best performing in the last 1 year, but what about if the 3 year returns are not as good and the 5 year returns are a little worse? What about if the fund has been doing really bad in the last 6 months but really well over the last 3 months? So it's okay to say that you want to invest in the best performing mutual fund, but best performing mutual fund over what time frame? For that, what ET Money has done, it has created this concept of a report card where it says, of course, we will go and look at returns, but we are going to look at a number of factors and a number of parameters before actually suggesting to you which is a mutual fund that has a good track record, because that's what the ET Money report card does. All right. I'm going to spend only 5 minutes on this. If you want to know actually details about it, then you can go to ED Money's YouTube channel, just type ED Money Mutual Fund Report Card, and there's a 15-minute video where you're able to drill down and you're actually able to see what actually has gone into it. But हम लोग थोड़ा ऊपर ऊपर से just काम करेंगे. You don't need to know all the nitty-gritties. Just understand that somebody has done the homework, which is actually saving us a lot of time. In this category, which is the flexi cap category, there are some 34 funds. And over here, ET Money has given the Parag Pare Flexi Cap Fund a ranking of 4. Where does this ranking of 4 come from? Two aspects. One is performance quality, the other is downside protection. Performance quality means returns, right? The purpose of an actively managed fund is to beat the benchmark. Has it been able to do so on a consistent basis across various time frames? Is what has been measured over here, and the fund has scored 4 out of 5. Acha, let's assume there are two types of funds within the same category. Both have given 15% returns. Does it mean that both look the same? Suppose one of them has taken a risk of only 12, but the other one has taken a risk of only 10. Then the one that has taken lesser risk to give you more returns, wouldn't that be a superior fund? That's also called the Sharpe ratio. Higher the Sharpe ratio, the better. And you can see over here that this fund has scored 5 out of 5 on that return, right? So based on performance qualities, which is an indicator of the fund's capability to generate returns, it's got a score of excellent. But you don't just want to look at returns. You want to see how the fund is done in bad times as well. Because remember, अच्छे दिन बुरे दिन ना आपके लाइफ में भी आते हैं, मेरी लाइफ में भी आते हैं, म्यूचुअल फंड स्कीम के लाइफ में भी आते हैं. When the market is going down, has it been able to fall more or has it been able to fall less than the benchmark, is what is measured over here. And it is saying it has been able to protect your capital fairly well. Investors get scared of volatility. Too much of volatility, too much of standard deviation scares us. And again, over here, the fund has scored pretty well. So both on performance as well as downside protection, scores are excellent. So, these are the 2 or 4 main qualities that the report card is looked at. You're not just simply going and saying what has been the returns in the last few months. If I scroll down, I like this feature that they've put over here as well. They've given a value research online rating. It's a tool that many people from the investment management community use as well. And it gives a star rating to all the funds from 1 star to 5 star. And you can see over here, this fund is 4 out of 34 on the ET Money rank, and it's got a 5 star rating over here as well. Okay. And if you scroll down, there's a lot more information. If you want to see, it's very nicely sort of presented. But when you scroll down and you come over here, this is a conundrum. This is a problem that a lot of people face at some point of time, where you're saying, Kushal, this fund has done not very well. In fact, it's done really poorly over the last 1 year, right? In last 6 months, this has been the worst performing fund in this category. But despite that, in 3 years and 5 years, it's been almost the best performing fund. So, this is something that a lot of people have this question. Is my fund has not been doing very well, should I sell my fund and go and invest in another fund, or how long should I give my fund before I go and invest? And I would actually say, within the category, if the fund is doing really badly for a period of 2 to 3 years, then you could think about switching out. And I wouldn't even think about switching out all my money, because you know how it is ना, अगर पूरा redeem करके कहीं और डाला, जैसे ही हम लोग redeem करते हैं अपने नसीब के हिसाब से, that fund starts to do very well. So I'm not a big fan of chopping and changing too much, but yes, this is something which you can go and see. So this is basically the report card. I'm going to go back to here, and I'm going to again just show you a little bit on in terms of how these compare. Okay, let me explain to you what that means. Comparing mutual funds, not this particular one, the other screen. Just hold on 1 minute. Okay, I think you can all see my screen now. So we've just picked, and I'm just showing you what this comparison is. We've taken 4 different funds. You'll see the rankings over here on ET Money are 4, 12, 20, and 31. So I've got funds which are schemes which have got a really good ranking, mid ranking, and a not so very good ranking as well. And अगर आप देखो ये VRO rating say 5, 4, 2, 1 almost मिलता रहता है, right? It matches with this rating. And if you scroll down, why is that the case? And firstly, you will see returns, because we all invest away primarily for returns, right? And if you look at 3 to 5 years, because utna to track record aapko dekhna hi hai, you will see that the funds on the left has done much better than the funds on the right, which actually means it's got that sort of drives its higher rating. But in the last 3 months, or in the last 6 months, for example, it's a very different story, right? The funds on the right have done much better. They seem to be catching up as well. Go down to the risk measures. Standard deviation, we're saying lower the better. The funds on the left have a better standard deviation. Sharp ratio, higher the better. So the funds on the left have a better Sharpe ratio. And then there are, basically all these details are given there. Now, honestly, aapko nahi samajhna hai all of these. If you're interested, as I mentioned, go look at the video. It's very good to upgrade your knowledge. But the point I'm trying to make over here is that what these report cards are telling you, right, and any report card around, is has the scheme got a good track record or not? Does it mean that this fund, which has given you 25% CAGR over the last 3 years, which is phenomenal, does it mean that the next 3 years are also going to be as fruitful? Does it mean that this fund, which is given 10%, is going to continuously do poorly? As we can see, it's already improved over the last 6 months. So I think if you would ask me how to select a mutual fund scheme, I would say 2 things. Number one, you must understand if there are 20 funds in the category over a period of 10 years, okay, if there are 20 funds in the category over a period of 10 years, each scheme would have gone and spent time in all quartiles, right? Each scheme would have gone up and down, because that is just the nature of the game. All right. What I would do is I would just check which has a good ET Money ranking, a decent ET Money ranking, map it to the fact that it's got a good VRO rating as well. And if both of these are matching, it essentially demonstrates that the fund has a capability to generate a good track record, that despite bad performances, it has managed to deliver you good returns. इससे ज़्यादा आपको honestly दिमाग लगाना नहीं है, because people come and ask me this question. People come and ask me, Kushal, is there any good scheme? Is there any bad scheme? And I actually tell them, it's really my belief that there is no bad mutual fund scheme. Right? Think about it this way. See what's happening in the industry right now. Mutual fund employees, when you go and you talk about it, if you talk about the senior members in a mutual fund team, right? Not just the fund managers, huh? I'm talking about key personnel. Yeah, 20% of their CTC. That's a lot of money. 20% of their CTC compulsory उनको invest करना पड़ता है उनके खुद के scheme में. 20% of your CTC, yaar, that is for savings. Do you do 20% of gross CTC as SIP of your salary? I mean, I highly doubt it. But they are investing a large chunk of their money. It forcibly has to go. SEBI ध्यान रख रहा है, कान रख रहा है इस पे ऊपर. And the money is locked in for 3 years. And it's not just the senior people, even junior employees. First year may 10%, but at the end of 3 years, they are also investing 20% for savings hota hai. Right? And that's actually works well. I started my first SIP because one of my seniors forcibly made me do my first SIP. ऐसे ही तो सब शुरू होते, right? All of them are going and investing over here, and their amounts are locked in. So I would say don't chop and change too much. If you really get confused about, you know, which is a good scheme and you still can't make up your mind, you know what you should do? You should just go and pick up an index fund. Just pick up an index fund, pick up a Nifty 50 fund in the large cap space. In the mid cap space, pick up a Nifty 150 mid cap fund, because that index fund is the one that everybody is trying to beat. So you might as well pick that fund, no, agar aapko ye nahi karna hai, right? That's how mutual fund report card, that's how the ED Money report card helps you to go and select a mutual fund scheme, right? And then we come to the next step, which is how do you invest, or how much to invest to be able to achieve your goals on time. And again, over here, what we're going to do is we're going to play around with the calculator. So you'll get a live feel in terms of how this is actually done. And you can go around and play with this yourself. All right. So again, I've gone to ED Money's website, and there is this SIP calculator where you're seeing if you do a 10,000 rupee monthly and you want to invest for 25 years, if you're getting a CAGR of 8%, you would have created 95 lakhs. But we are saying equity has the potential to give you 4 to 6% above inflation. So I think 12% is a good long-term expectation to have. And you see the jump from 96 lakhs, it's gone to almost 2 crores. That's one of the reason people go and invest in equity mutual funds. But today we want to invest to solve our goal, right? And today our goal amount is known to us, isn't it? Our goal amount is known to us. And what is the goal amount? The goal amount is that the daughter's education costs me 30 lakh rupees today, right? When do I need the money? I said I needed the money after 20 years. So I'm putting it down here. If I need the money after 20 years, I think 12% is a good expectation to have. We've just seen why that is the case. तो अगर अपने को 30 लाख रुपए चाहिए, अगर हम लोग SIP कर रहे हैं, means if we do a monthly SIP of 3,000 rupees a month, assuming that we will earn 12%, we will reach our goal of 30 lakh rupees on time. But असलियत में, if you are going and investing, one of the things we must understand is महंगाई का जिक्र आपको करना पड़ेगा, because 30 lakh rupees today is not going to be 30 lakh rupees, or the value is not going to be 30 lakh rupees 20 years down the line. No? So one feature I like a lot in this calculator is this adjust goal amount for inflation. And I'm going to toggle this on. And when I toggle this on, मेरे को तीन option मिलते हैं. I'm going to choose the central option. And if I choose the central option, you've seen from 30 lakhs, this goal has become 96 lakhs. Give me a thumbs up if it's all coming together for you now. You're saying that the value of 30 lakhs after 20 years, if inflation is at 6%, is going to be 96 lakh rupees. And therefore, 3,000 रुपए SIP से काम नहीं चलेगा. 9,500 rupees on average आपको करना पड़ेगा. Again, give me a thumbs up if we understand that this is the reason why topping up your investment amount is absolutely critical. It's absolutely critical because महंगाई आपके लिए रुकने वाली नहीं है. तो आप महंगाई से आगे रहना चाहते हो. You want to be in front. And that's why 3,000 bucks SIP is not going to help. You need to keep increasing it. I'm also not a fan of increasing it by this 10% every year. Right? Because 10% every year means if I'm doing an SIP of 10,000 bucks a month today, and every year I'm increasing it only by 10%, then to get to 20,000, it's going to take me almost 10 years. Yeah. Practically that does not happen, right? Practically क्या होता है is that आज आप 10,000 कर रहे हो, the next time you increase it, you're probably going to increase it to 14,000-15,000 anyways, if not more. So in the beginning, you're going to get much more jumps. As your SIP amount becomes larger, then it will become less. So shuru mein, you must learn to get very aggressive with your investments. How much ever you can invest, you should go and invest. Okay. People come and ask me, Kushal, this is fine. 9,500 rupee to get to my goal amount of time is fantastic. But what if I have a lump sum amount to invest? So over here, there is something called a CAGR calculator. And CAGR calculator, we know our lump sum amount, and our lump sum amount over here is 96 lakh rupees, right? So I'm going to put here 96 lakh rupees. And when do we need the money? We said we need the money after 20 years. Acha, agar aapka lump sum amount is only 10,000 rupees, then you're seeing over here, the CAGR that you are looking for is 40%, which is obviously not going to happen. 20 साल के लिए, I told you, as an expectation आपको 12% लेके चलना पड़ेगा. So we have to get this CAGR down to 12%. How do we do it? We have to add more. तो 10,000 से पहले 1 lakh is still 25%. What if we add another zero? If we add another zero, now it comes to 12%. So if you want to invest and you want to save for that 96 lakh, but if you want that 12% CAGR, then lump sum, you need to do an investment of around 10 lakh rupees. That is what is going to help you achieve your goal on time. Most of the people use a combination of lump sum and SIP to be able to go and achieve their goal. All right. I hope that again is pretty clear to you. Give me a thumbs up as we move to the last point. So the fifth point was, how much do you need to get to your goal? What we've seen is we've played around with the calculator, and एक चीज अपने को समझना है that it is not a goal, it is the inflation adjusted goal that we need to be able to go and reach. All right, that inflation adjusted is absolutely critical. And just the simplest part of this presentation is give yourself a birthday present and top up your SIPs or top up your investments at every given opportunity. Now we're going to come to monitoring and review of our portfolio. When I come to monitoring and review of the portfolio, again, what we're going to talk about, and I'm going to share my screen with you once more. We're going to go back to the same calculator, right? Is to say two things. One is that you should monitor or review your portfolio once every 6 months or at least once every year. I think there's no point reviewing it too much often than that unless something bhayanak happens in the market, because apne ko zyada actually kuch karna nahi hai. Okay, 6 months and every 1 year it's fine. So you have to do a couple of things. One is that you have to see that, suppose after 3 years, see this 12%, no, this 12% CAGR. The thing is that the 12% CAGR is not going to come to you 12% every year, right? Some years you might get 40% return, some years you might get negative 25% return. So you are saying over a period of time, you are going to get 12%. When the market is going to give you returns, you have no control over that as far as that is concerned. However, if you have invested already for 3 years and समझो 3 साल के बाद your returns are significantly less than 12%, which is possible, right? Which is possible. Then what do? There are two things. One is you don't panic. Right? Because it's very likely to happen and it is going to happen to everybody, right? You can't do anything about it. But I would say in that case, it gives you an opportunity to keep topping up your investments, no? Because if you top up and instead of you add another 2 lakh rupees, all of a sudden the CAGR required over here is going to be coming down, right? The CAGR required over here is going to be coming down. Let me go back to this SIP calculator, and we know our goal amount. We said it was 30 lakhs, right? And we said over here 20 years, and we adjusted this amount. This is where we were, right? This is where we were. I would say that if I know that I have to invest 9,500 to get to this goal of 96 lakhs, the other thing that I would do is, instead of 9,500, I would try, if it's possible, to do an SIP of 12,000. मेरे लिए भी थोड़ा बफर रखता हूँ ना, बिकॉज सी इफ यू आर गेटिंग मोर रिटर्न्स देन दैट्स फैंटास्टिक. अगर आपको 12% से ज्यादा मिल रहा है देन दैट्स ग्रेट. बट अगर आपको कम रिटर्न मिल रहे, यू आर मेकिंग अप by trying to stay just a little ahead. And again, this is one of the reasons why you need to keep up topping up your portfolio. Then there is another point. All right. So one is that you need to keep reviewing. And if you're falling back, one thing is to do is to keep topping up your portfolio. Okay. There is another thing which is called glide path management. What do I mean by glide path management? Now, today, for example, this goal is 20 years away, right? This goal is 20 years away. But with the passage of time, the goal is going to come closer and closer and closer to you also. मतलब आज के ज़माने में it is 20 years away, लेकिन 5 साल के बाद the goal will be 15 years away. 10 साल के बाद the goal is going to be only 10 years away, right? So as you reach closer and closer to your goal, you will see over here is that this is your bucketing strategy. We've seen that bucketing strategy. Today we are in the 20-year bucket. We are in the 20-year bucket, so we are investing in these pure equity funds, right? But as you come closer and closer to the goal, don't the buckets change? As you are moving closer and closer to the goal, you are also moving from one bucket to the other bucket and finally to the bucket which is only 0 to 3 years. And this has a lot of consequences. The consequences that it has is, in this bucket of 20 years, you were keeping and investing in pure equity funds. You were being very aggressive with your investments. But when your goal is only 5 years away, you need to make sure that you have to reduce the equity as part of your portfolio. You have to reduce the equity as part of your portfolio, especially as you're coming 1 and 2 years away from your goal. Then you are moving largely to debt. This, where you are moving from one bucket to the other, is called glide path management. And this is something from a review and monitoring perspective. You have to ensure that you are always in the right bucket at the right times, all the times. This is called glide path management. And with that, ladies and gentlemen, I hope you found it pretty easy how to use this 6-step template, and you can literally solve it to use any goal, right? For example, if your goal is 5 years away, then 5 years away means you need to use the money within 5 years. So that's where you will start. And therefore, these are the kind of funds that you will invest in. That is already told to you. Once you know these are the kind of funds you invest in, you can go and select a mutual fund scheme. It's very easy to select a mutual fund scheme. We've just gone and shown you how. And then finally, how much to invest so that you reach your inflation adjusted goal on time. And then you have to monitor it, that as it comes closer to your goal, you are reducing and you are managing the equity component of your portfolio also. All right. This is the 6 step template, and you can literally use this 6 step template to structure your thinking, to structure your thought processes, and go and solve for any goal that you want. If you need help to solve for all of this, then click again like or notify or subscribe to this ET Money YouTube channel, because somewhere down the line I will talk about the road to genius. And ET Money Genius sort of does all this for you automatically, right? So as an investor, you will have a choice. The choice is that you can either do all of this on your own, right? If you have the confidence to do all of this on your own, and I build up your confidence, you can attend the Market Master series. We will be having that on a regular basis, and we will be doing it on this YouTube channel. So if you do want to attend the Market Master series, again, just make sure that you are notified, etc., as far as all this is concerned. But we will go and build up your entire thing to the ET Money Genius side as well. With that, I've come to the end of the presentation. I'm very happy to answer a few questions right now because we still have around 5-10 minutes. But I hope after this, you have better clarity, you have more confidence in terms of how you want to go and approach your investment plan. You have to invest aggressively, but you want to do it in a structured manner. And therefore, this is the way that you can go about and do it. All right, this is the way you can go about and do it. I'm open to questions right now. And Barun has a question. Having a SIP and flexi cap fund, is it a right move or go for lump sum in mid-end cap? Barun, you'll see in the presentations to follow that the first good thing that you've done is, assuming you've already started your SIP, is you've already started investing. Okay. You want to keep it simple and have large cap separate, mid cap separate, small cap separate. You can do that as well. You want to go and invest in a flexi cap fund where the fund manager is deciding for you whether it's a good time to be invested in large, mid, and small. Then you can do that as well. There's no right and wrong. All right. As far as that concerned, do whatever you are comfortable with. I think that's the correct answer and the correct piece what I have to tell you. Okay. Good. I'm not seeing any more questions. Barun again had a question. What is the best way to track record of a mutual fund manager? So I showed you the ET Money report card, right? I showed you the ET Money report card. So I hope that has given you some sense in terms of, see, there is no magic wand to be able to figure all this out. Okay. There is no magic wand to go and figure this out. You just have to select something that has a good track record and have faith. Just have faith, right? That's all. Monitor it on a regular basis, of course, but beyond that you can't do much. And if you still have questions in terms of how to select a fund, as I say, always go and select an index fund then, because then that it takes the question only out. Now you can't argue with an index fund. You're investing in an actively managed fund because you want to try and generate better returns. Sometimes you may succeed, sometimes you don't, right? So if you want to save yourself the disappointment, then go and invest in index fund. Even that's not easy, because there'll be some times when all the actively managed funds are performing better than the index fund. Then again, you'll be crying, right? So remember, different funds will do well at different periods of times, but this is what you need to do. Okay. Sanjay has a question: how to decide between self-manage and PMS? PMS kahan se aa gaya idhar? Self-manage and PMS means, self-manage is a do-it-yourself investing, right? PMS, first of all, you need 50 lakh rupees to invest in a PMS. So unless your net worth is around 2 to 5 crores, I don't think PMS should be an option for you. You can go and invest in mutual funds. If you want help with all this, how to manage your mutual funds, then you need to check out ET Genius, because that gives you a solution where it's doing a lot of the things that I've told you. It's automating and doing it for you. All right. Pavitra is only interested in equity mutual funds. Should he also invest in debt mutual funds? Pavitra, it's a good question. And I'll make a case in the next presentation as to why you need a little bit of debt in your portfolio. So tune in to that presentation, and I think you'll be able to answer this question yourself, right? Not only debt, but how much debt and how do you include debt as part of your portfolio? Pavitra, that's something that I will be able to answer for you in the next one. Winkle, how are you doing, man? You've achieved 5-year goal in SIP investments. That's magnificent. SBI large cap, and the fund is not performing well. Should I keep the money for compounding or withdraw and move to another fund? They go, keep the money for compounding means even if you remove it from that fund and you immediately put it into another fund, the money will still compound, right? Suppose you've been investing and you've created a corpus of, let's say, 25 lakh rupees. If you remove 25 from one pocket and put into another pocket, compounding to fir bhi chalega. Compounding will not work if 25 में से you redeem all the 25 and then you invest only 15. 10 आपने अगर खर्च कर लिया, which is also okay, but you won't get the benefit of compounding. My personal preference, and you should not be colored by mine, is that in the large cap space, index funds are doing well because, like I said, if 80% of the corpus has to be invested in the same 100% companies, there is a lot of similarity between an SBI large cap fund and a Nifty 100 index fund or a Nifty 50 index fund, right? And be prepared that sometimes your fund will do better than the index, sometimes the index will do better. But like we've seen over the last few years, majority of the funds in the large cap space haven't been able to outperform the index because they have a higher cost structure and the experience that you're getting is fairly similar. Okay, so yeah, you could consider shifting your funds from that to an index fund. You'll still get the benefit of compounding. Okay, Tahir, you're investing through Genius. Now you're planning to buy a car, 15 lakhs. Good luck in the next 2 years. Do I need to start a new investment or I should increase the SIP? Yeah, but I don't know how long you've been investing. I don't know what your current corpus already is. See it this way, Tahir. There are 6 steps you have to follow, right? The 6 steps you have to follow. Now, 6 steps may your step over here is that you need the money within 2 years. Acha, if you need the money within 2 years, you cannot take too much of risk with that money, right? Assume you're cut to cut. Assuming now you've got 13 lakh rupees, right? Assume your corpus is already 13 lakh rupees. If you need the money in 2 years, the best thing that you can do is go and invest it in a debt mutual fund ताकि आपको safety मिले because you're going to need to spend this money in the next 2 years. Let's assume you've already got a corpus built of 20 lakh rupees, right? If you've already got a corpus built of 20 lakh rupees, then your options are a little different, right? So it really depends in terms of, and if you are investing through Genius, go and check, play around with these calculators, right? I think one thing what Genius doesn't do for you is tell you how much you need to invest to get to your goal. So that I've shown you how to play around with the calculator. And 2 years, it's pretty easy, right, Tahir? So you should be able to do it. Sanjay Singh, is it good to keep same AMC for two funds, blue chip and small cap? You could. I mean, sure. There's, like I said, it's I I I mean, different funds will do well at different points in time. Um, so it's okay. Long, short story, it's okay. The question, Sanjay ji, that you have to ask yourself is, can you remain invested in these funds for the purpose in which you want to remain invested in these funds? अगर आपका 10 साल का plan है, can you remain invested in these funds for a period of 10 years? So I think that's okay. Tell something about Axis MFF. Most of the funds of Axis is underperforming. Yeah, again, like I'm saying, guys, if you have this, oh, my fund is underperforming, oh, my fund is outperforming, number one, ये चीज चलती रहेगी. And अगर आप you're losing sleep over it or you're really getting, that itchy kitchy over it types, index fund में invest करो यार. There's nothing otherwise. It's a very good, it's a pedigreed fund house as far as equity is concerned. All right. Lokesh, I invest in quant, large and mid cap fund. Aditya Birla, equal 50 index fund. Is it right for beginners? I think for beginners, the fact, Lokesh, that you've started investing is the best thing that you could have done for yourself. You need to now continuously, if you've just started, make sure you complete 1 year and then give yourself a landmark of 3 years to complete, right? Sandeep, how good are ELXS funds if tax deduction is not required? I don't rate them very highly. I think I invest in ELSS only for tax deduction under 80C. Otherwise, see, the point with ELSS also is that the mandate is not very clearly defined, right? क्या invest कर रहे हैं? Large cap में, small cap में, mid cap में. So I would say if you're not bothered about the tax calculation, then go and put it into a fund where you at least know that this is the purpose of that particular fund. Okay. Brijesh, after 20 years, if you want to withdraw through SWP, can I transfer fund to low volatile fund to reduce volatility? Absolutely correct. How the taxation will be? See, anyways, equity fund may, if you are withdrawing after 1 year, your gains are taxed at 10%. If you're withdrawing it less than 1 year, your gains are taxed at 15%. So tax तो आपको भरना ही है, right? And if अगर आपका 20 साल का plan है इधर, then by doing an SIP on every SWP, it is only going to be taxed at 10% because it has become long term, right? Rajinder, you're a beginner, you want to invest in SIP, your saving is very less. How can I start with small investment amount? Take any Nifty 50 index fund. Take any Nifty 50 index fund. जो भी नाम आपको पसंद है, Rajinder ji, और शुरू करो. And subscribe to ED Money's YouTube channel. There is a program that I run called Taking Your First Step to Creating Wealth. So if you're taking your first step to creating wealth, attend that webinar, but get started in a Nifty 50 index fund with whatever amount you can. 1,000 रुपए से अफोर्ड कर सकते हो, 1,000 से चलाओ, 5,000 से तो 5,000 चलाओ, वो चॉइस आपकी है, right? Sandeep, are small funds good for 10 to 15 years duration? Yes, they are for 10 to 15-year duration. But tune in for my other presentation. I'll show you some pretty interesting data of how mid cap and small cap has behaved over the last sort of decade and why I put small cap into the opportunistic space, right? So that is something that you will be able to get a better insight. But I think 10 to 15 years, fair enough, you can invest in a small cap fund. All right. And 3 minutes past or 4 minutes past 12:30. Do share your comments in the comments column on the comments but once I close this presentation. But I hope this was useful for all you guys and that you do indeed have a little bit more clarity. You can go and execute and implement some of the things that you have learned during the presentation today. So with that, I take your leave. I hope to see you all soon on the YouTube channel that ED Money has. All right. Enjoy the rest of your weekend. Have a great afternoon. Goodbye, everybody.